It's been one of the most turbulent weeks for some time in markets. Oil prices have fallen to the lowest in 4 years. Global equities are where they were 6 months ago. All this has been happening whilst the IMF has been warning about the outlook for global growth. With me to discuss what's going on is James Mackintosh, the FT's investment editor. James, is it as simple as that? Are people just worried about global growth all of a sudden?
No, nothing's ever as simple as one issue in markets.
So what's going on?
This is clearly part of what's going on. So
China
yeah, expectations for global growth have been coming down for some time now. So you could see that priced into bond markets, for example. Long-dated bond yields have been coming down all year, and private sector economists have been lowering their estimates for growth in Europe.
But we've had
and in Japan.
And we've had some very bad data in Europe this week.
Yeah, I mean, Germany is looking like a disaster zone, although it may just be a single month. Always be careful with single months.
Okay.
But it does look very bad on the face of it.
Yeah.
But it doesn't feel like any of that was the cause, as it were, of falling markets.
So what has been the trigger this week then? Why suddenly this week?
Well, the specific trigger for the biggest bit of turmoil seemed to have been the Fed coming out with the minutes of its last month's meeting. That really was quite a shock to the markets, in spite of the fact that they really said very little of any note.
Why was it a shock? And initially shares went up quite steeply, and now they've fallen.
Well, shares went up, but there was a very sharp spike in volatility. The dollar went into reverse, having been on this soaring buying spree of the dollar. Investors suddenly turned around and started selling again. And I think that ultimately they'd just become very, very sensitive because so many people were pinning so much hope on the dollar going up, on interest rates going up in the States.
Is it a case of maybe too much herding, if you like, too many people?
Exactly. This was the crowded trade. So everyone was betting on a stronger dollar. And the people who were late into that trade, when they started to see that there was some, even though the threat from the Fed was minuscule, that minuscule change in language was enough to shock them.
And if we turn to oil, is it the same factors, a weakness in global growth? Presumably there's sort of supply issues as well there.
Yeah, there's been some unexpected extra supply coming into the market in oil, and it looks like there's a lot of supply in the market. But there is also the global growth, meaning just in general weaker demand.
Now, October's are...
You should also say the strong dollar, of course, is a big factor in weak oil because it's just moves the opposite way.
And for other commodities, obviously, as well.
And one of the interesting things about the sudden reversal in the dollar this week was that whilst the dollar went up and then down and then briefly up again, the oil price just went straight on down all the way through, so it proved that the selling pressure on oil really is quite high.
Okay, James, October's very often a turbulent month. We get volatility in previous years. We've had volatility in previous years. Is this just another example of October, a red October, or is this start of something bigger correction?
Well, we've got to hope this isn't a true red October, because actually when October's bad, it's really, really bad. So you think 1929, 1987, 2008, October's average looks bad because of months like that when it was particularly awful. If you strip out those especially awful months, October actually looks much like the rest of the year. It's
what's
just
your
that
feeling about this
particularly bad times.
Than this October?
It's impossible to say, but it feels pretty worrisome. The fundamentals are looking bad. People were very positive. There were a lot of crowded trades out there. It all comes down to whether people are going to feel positive enough to buy on the dips, and ultimately that's pretty much impossible to forecast.
On that slightly gloomy note, we'll have to end there, James. Thank you.